Hello and welcome to this analysis. Now, in today's video, I've covered SBI Cards. SBI Cards is a subsidiary, as we all know, of State Bank of India, and is registered with RBI as an NBFC. As the name suggests, it's into issuing of credit cards. Launched in the year 1998 by SBI and GE Capital. In 2017, Carlyle Group and SBI bought the remaining stake of GE Capital, and in 2020 we had its listing of the first card issuing company in the country got listed in that month. It has a 17% market share of India's credit card. Its revenue breakup is interest income 45%, spending 29%, various sub in offers 6%, and others 20%. The gross NPA is at 2.64%, which is gone up by 0.43%, while the net NPA at 0.96 has also gone up by 0.16%. A market cap of 68,150 crores. It has a return of equity of 22%, and in the last 5 years profit growth has been a CAGR of 22.7%, which is quite decent. The trailing 12-month peg ratio is at 3.4, which is quite low, but the piracy score is very low at 3. Promoter holding is at 68.62%, FII is 8.72%, domestic institutions 16.54%, while the public holds a very small 6.1%. Now let's try to understand what the charts are trying to tell us where the road ahead for SBI cards. Now SBI cards, as we can see, 2020, just around the pandemic, before the pandemic bottom, the listing happened, and it was, one of the few issues pre-pandemic which saw a lot of subscription, but the opening and then the subsequent tumble down was quite severe. We can see post listing down to 530, but from there splendid recovery for a year and a half, and then again a tumble. Now post this tumble attempt to recover and again fall, so it did a 78%, almost 78% retracement from its swing highs. Now, interestingly, it is among the few stocks in the financial segment which actually has broken its June 2022 lows during the election result, and the tick below that, definitely not closing basis, but among the rank underperformers among all the financial stocks, one can call it, since it comes under that category. Now let's have a look at the weekly chart. Now in the weekly chart, interestingly, if you can notice that since June of 22, irrespective of its attempt to go down, it has always managed to go and close its candle above 680. That's a very, very crucial level. So every time there is buying support coming in, you can see it in June 22, a minor attempt in Jan 23, a breach of that in March 24, and on the election result day also a severe breach down, but an extremely sharp recovery from there. So important from the medium term point of view that the level of 680 does not breach downward on a weekly basis. If it does so, that would mean it's opening further downside passage, as smart money is now refusing to hold it. If that were to happen, the resistance in the weekly charts, as sorry, before that, let's go to the monthly chart and once look at the resistance. The monthly resistance is around 775 near this trend line, and above that the Ichimoku baseline near 840. In the case of the weekly, there is immediate resistance at 720 odd levels, which is the Ichimoku conversion line. Then there is the cloud resistance around 750 in the weekly. If that takes out, then this long flat Senkau B line at 800 and around 800. Then a good move upside possible till 925, where the next major resistance happens. But please keep in mind the stock continuously was has been making lower lows and lower highs, except this one bunch out here. So the true picture of the upside would only come on for the stock above 750. 720 is the minimum requirement for it to start pushing up, where we could see some short covering, but institutional interest in my view doesn't come before 750 in the stock, and 680 equally crucial for it to hold on weekly basis. Now let's have a look at the daily time frame. See, even in the daily time frame, you can see from the March lows that it did crash only once below that. That's the June 4th candle, recovered above it. So on daily basis, it becomes 676. Below that, serious danger for the stock. One need not wait for the weekly then, but it could be very, very dangerous if one waits. Here also you can see in the lower time frame, stock is continuously from 12th of 11th of July making lower lows, lower highs, and pushing its way. So again, see, you can see this level 722, above which there could be some 722, 727. There could be some interest coming in. Short covering definitely would push its way in above that. Above that level, the next resistance comes in at 750 and then 775. So very, very important levels for a momentum buyer would be interested only above 750. Yes, above 725 onwards till 750, it could be a consolidation zone, but that's the minimum tick we required it to take off. Now the support in the daily is coming at around 705 to 700. That's the important zone in case it sees a pullback and then move up, because we are entering into the last week of the settlement. There will be a lot of rollover issues in, since it's a derivative stock. Now the derivative data, the future open interest of the stock today, that is Friday, on 1 day basis is a very minor fresh long, and on 5 day basis we've seen some bounce that is also showing a 3.7% jump in OI, but not too much of a price jump. So nominal increase in fresh long, which is a positive signal for the stock, at least in the immediate short term. Now at a resistance, let's see what it does above this. Let's go and look at the hourly time frame to decide further course of action. As you can see, this 720 to 727 level looks like a wall. Good support coming in the hourly at 705 as per the Ichimoku cloud, between 710 to 75. So from a trading point of view, one I would be looking at something like 710 7.5 to add with a trading stop loss at 697, and then play below 697. I wouldn't wait to hold, and we already know that the 700 and 696 level in the daily is the last support. Before that it starts plunging, so that's where some interest would come into traders to add, if there is a panic drop in that. On the other hand, above 725, momentum would slowly build up for the stock. So overall, a stock which is been in the doldrums, not done any great compare when we compare it to the other stocks. Even though there is nothing from the credit card space listed, but almost all banks have credit cards and all banks are listed. So even from that angle, it's not done too well. But if there is any glimmer of hope, any chance of this doing well, I would wait for it to accordingly get aggressive in it, or take a chance slightly below. Failure to hold those levels, not going to touch. That's the maximum risk I would take as a trader in it at any stage. I hope this video is of help to you, and you liked it a lot. So please do like it, share it to your known people, and do follow me for regular updates and outlooks on stocks. Until then, happy investing.